Good morning. This is Larry McMillan with a stock market update on Monday, March 21st, before the market opens. So the market had a strong rebound rally last week, and the question now is that was it just an oversold rally or is the bottom in? And frankly, it's too early to answer that question. We have taken some long positions in line with some confirmed buy signals that came up last week. But the S&P chart still has overhead resistance. It has now just rallied back to its 200-day moving average. And then above that is the resistance at 4,600 that's been there all along. So we are still looking at the 4,600 as sort of a demarcation line between all out bullish, above 4,600, below that still using some caution. The equity-only put-call ratios are now both on buy signals. The standard ratio is a little late coming around, but it has as of Friday. And they're both still very high on their charts. They're not dropping rapidly yet. We would prefer to see that happen and maybe get them below February's lows in order to get a really solid buy signal there. The breadth oscillators are also on buy signals, both of them, and they're in modestly overbought territory already. So that's good news in that when a market is coming off a bottom, the breadth oscillator should get overbought and stay there. But it also means that a couple of days of negative breadth could reverse the situation completely. New highs versus new lows. We've seen improvement there, but no buy signal yet from that indicator. VIX, the spike peak buy signal of a couple of weeks ago, which is really the first buy signal that came along and was actually premature, is still in place. And so we're holding that position as well. The trend of VIX, which is a more intermediate term thing, is still struggling. A VIX and its 20-day moving average are both above the 200-day. And then finally, the construct of volatility derivatives is improved somewhat as well, in that the term structure of the VIX futures and the term structure of the volatility indices are both sloping upwards now, modestly on the futures, and the front 2 months, the front month is now April. So we're looking at the price of April versus May. Right now, April is lower than May, so that is also somewhat bullish. That indicator is not nearly as bullish as it has been in many other months leading into this, but it's bullish right now. So overall, we're still seeing the trend perhaps in negative light, in that S&P is below 4,600, it's below its 200-day moving average, and VIX is above its 200-day moving average. VIX would have to fall just below 21 in order to reach its 200-day moving average. On the other hand, we have gotten a lot of short-term buy signals from our more sensitive indicators, and we are following those as well. So there will be a resolution to this fairly soon, but I don't think you can necessarily say yet that the bottom is in. So I invite you to visit our website, check up on our daily newsletters where we keep you up to date on these things in a timely manner, and have a great week trading.